Everybody is talking about aligning financial markets with the 2 degrees target, but what can investors actually do to fight climate change effectively? So the point I'm making today is investors need to stop focusing on investments that feel green and move on to investment that actually cause real-world impact. So let me tell you why I think so and what investors can do to drive real-world change. So I would say, first of all, we have certainly enough global challenges that require funding. So I guess all of you know the Sustainable Development Goals, these 17 colorful bricks that are out there. So the United Nations estimate to reach these targets by 2030, we need something like 2.5 trillion US dollar in additional investments every year. So that's 2,500 billion every year. So that's a lot of money. So the question is, where is that money going to come from? Now, what really astonished me when I compare this number to the latest numbers of the Global Sustainable Investment Alliance, they tell me that currently something like 4 trillion US dollars are flowing into sustainable investments every year. So this shows currently we have more inflow into sustainable investments that we need to fill the SDG funding gap. So, but then my big question is, why haven't we solved this world's problem already? And for me, this kind of mismatch between sustainable impact and the SDG funding gap really shows that we have to really have a close look at what's the impact of all this sustainable investment. Is that really working? Do these investments really drive the real world change we need? So that's exactly the question that me and my co-researcher have been looking into in the last few years, and we just released a paper titled "Can Sustainable Investing Save the World? Reviewing the Mechanisms of Investor Impact," in which we basically review all the academic knowledge there is on the topic, how can investors affect companies to the better? And I'm going to share with you some insights we gained in the process of doing this research. But first of all, I want you to think a bit and have a brief poll. So my question to all of you is, we heard about Tesla in the talk before. So what do you think? Does Tesla as a company have a positive impact on climate? So we see something like 50% of people think yes, and something like 49% of people think no. So this points at a first question that investors have to ask. If I invest in a company, is this company actually doing a good thing? And with Tesla, I think opinions are divided. So I think there's many reasons for that. I think on the one hand, you can argue, okay, Tesla builds electric cars. Every electric car replaces a fossil-driven car, so that's a good thing for the climate. I mean, other people may argue, good, well, but where is the electricity coming from? If you have dirty electricity, it doesn't really help. And what's about the life cycle of all these batteries and so on? And is kind of building new cars even the right thing? Shouldn't we kind of focus on getting cars off the road for good? So let's just have this point in mind. The first important question is, do companies have a positive, neutral, or negative impact? But then let's move on to my next question I have for you, another brief poll. What do you think, if we assume that Tesla has a positive impact on the climate, does buying shares of Tesla has a positive impact on the climate? Here we think 60% of people think that if I buy shares of Tesla, that's actually going to have a positive impact. And only 40% think no. I will get to that question, the answer of that question later on, at least from our research perspective. But for me, at the second point, so we also have to, besides knowing what's the impact of companies, we really have to know what's the effect I, as an investor, have on a certain company. So can I help Tesla to build more cars? So to get a bit clear about these topics, I would like to share 3 insights from our research with you. My first insight is, if you think about impact as a general thing, impact is the change in the real world that is caused by your activities. Now that may sound trivial, but it has 2 crucial aspects. It involves change. So if you do something to have an impact, something needs to change, it needs to improve and so on. I mean, that's the easy part. But the second aspect of that thing is causality. So the change needs to be caused by you. And that kind of implies that if you want to have impact, you have always to think about what would have happened without my activity. What would have happened if I didn't do something? For example, what would have happened if I didn't buy the share of Tesla? I mean, somebody else would own the share. So if I buy the share, does that really cause something that wouldn't have occurred otherwise? So if we take the concept of impact and kind of move it to the domain of investing, so what we find is that your impact as an investor is the change in company impact that you cause. So it's not the impact of the companies you own, it's the change in company impact that you cause. And so it really helps to distinguish between two things, between company impact, that's kind of what the world calls, the company calls in the world. If you take Tesla, Tesla builds cars. These cars, first of all, they replace fossil fuels, but also they kind of consume electricity. They also have some life cycle emissions. So there's a couple of ways Tesla affects the climate if you focus on climate change. But then the kind of more tricky question is, so what's your impact on a company? So your investor impact. So how do you influence Tesla? If you buy a share, first of all, nothing happened. Tesla doesn't get more money. It may dry up share prices, but only a tiny bit. And does that really help Tesla to grow faster? So this insight really shows we need to have a much stronger focus on what you as an investor cause in companies. As a third insight, there is two basic ways, two fundamentally different ways how you can have impact as an investor on companies. So you can help to grow green companies and you can help to change brown companies. So let's focus on the left side. So enabling growth of impactful companies. So first of all, you obviously have to find impactful companies. But then we did an extensive literature review and academic review on this topic. And what we find is, so far, there is clearly no evidence that investors can substantially enhance the growth of large established companies or generally influence the growth of large established companies. For example, Tesla. And the point is, Tesla is operating on perfectly efficient financial markets. If Tesla needs to raise additional capital, I mean, they can issue a bond, they can do a seasoned equity offering, they can get to their bank. I mean, it's really easy for them to realize projects that are profitable. So you as an investor, you can make tiny dents, but what we see from research, it's really not making a substantial difference. However, at the same time, what we see from our research, there's clearly places where you as an investor can change what's happening in the real world with deciding to allocate your capital to one place and not another. And that's all the places where financial markets have frictions. So you really, as an investor, you can affect the growth of small and young companies, and particularly for companies operating in immature financial markets. So let's look at as a more tangible example for this mechanism. So let's take the Roots Capital, a small company financing the Musasa Coffee Cooperative in Rwanda. So let's move to Sub-Saharan Africa, Rwanda. So there's a lot of coffee farmers produce coffee, but the problem is they have to sell the raw beans to local middlemen for a very tiny margin. So, and that often keeps them locked in extreme poverty. They just barely cover the cost and they cannot really improve their livelihoods. Now, they could sell their coffee to international specialty coffee markets and then gain a much higher margin and then earn much more on their harvest. But that would require substantial financing. So first of all, I mean, they only would receive money much later after the harvest. And second of all, they need capital-intensive machinery to prepare the coffee for export. Now that's where Root Capital, a small impact lending company, comes in. They provide loans to coffee cooperatives that do these two things. They buy the machinery necessary and they give upfront payments to the farmers. They deliver coffee, they ship this to global coffee markets, and they substantially increase the share of value add coffee farmers get directly. And this has a strong impact, a proven impact on their livelihoods, on their level of education, on their health, and the general development of the regions they work in. So this example shows for me, if you as an investor want to change what's happening in the real world by allocating your capital, you should go there where financial markets have the strongest frictions. And obviously places like this is kind of developing countries, but also kind of like markets with a lot of friction, venture capital, SMEs, and very innovative companies that have kind of unclear prospects in the future. So, but then let's move to the second mechanisms that I mentioned. So investors can also promote improvement at companies. So that's not about changing the growth path in a way. That's about kind of making a company doing what they do anyhow, but let them do it in a better and greener way. So we find clear evidence that this is something that investors can achieve with large established companies. And the most sound and best established way how investors can do so is by voting, kind of taking the shares. Investors are shareholders, so they can vote at general assemblies. They can also post shareholder resolutions. They can demand things from company, for example, having climate targets, having a science-based target, reducing their dirty energy consumption, and so on. And they can also do so-called shareholder engagement. So shareholders have the right to approach management and get into a dialogue with management and help them to improve over time. So let's look at another example to make this more tangible, which is kind of the complete opposite to this smallholder farmer example. So let's look at Hermes engaging Sinopec on climate change. Now, Sinopec is an oil major in China, so the largest producer of oil in China. And a problem with oil production is that there is a lot of methane leakage. It leaks from pipelines, but also from all these production facilities. And methane is a very strong greenhouse gas, much stronger than CO2. Now, Hermes, that's a service provider that engages companies on behalf of large investor groups, for example, a couple of English pension funds. So Hermes started a dialogue with Sinopec on climate change. And a while after they initiated this dialogue, Sinopec actually launched a program to reduce its methane emissions. So there's a couple of technical measures you can do to kind of remove this leakage. So if we kind of believe the information of Sinopec now managed to save 440 million tons of CO2 every year. So that's huge. So that's the annual greenhouse gas emissions of the Bahamas. But that also points at kind of a limit, Obviously, that's huge. That's great. That's a contribution to fighting climate change, but it doesn't make Sinopec to produce any less oil. So kind of with this improvement, engagement share, investors cannot really change the fundamental course the economy is on. So Hermes managed to reduce emissions, but they didn't make a contribution to decarbonizing our economy, I would say. So let me briefly sum that up and kind of give some concrete recommendations how you all as an investor, some of you may be an investor, we'll say a few words about that. Some general points how investors can change the world, so some hands-on tips. So first of all, enable impactful growth with alternative investments. So venture capital, small company, private loans, and so on. So allocate capital to young and impactful companies that struggle for funding as much as your risk tolerances allow. So the problem with these things, if we go in frictious markets where you can boost growth with impactful companies, that's obviously risky. And I think it's good advice for kind of your retirement saving or whatever savings, not to put everything into a very risky basket. So obviously you will put stuff into less risky places. And that's traditionally, I would say, large and established companies with a proven track record. And there, I think I really would encourage everybody to start encouraging improvement across the portfolio. So kind of pursue engagement and voting strategy across your entire portfolio. Screen your equity for certain practices and vote all the shares. But then also kind of a third step, which I would advise every investor, is be vocal about what you do and why you do, kind of and emphasize the need that we also need to have political change. So Now, I said a lot, you as an investor should, and so on. Now, some of you may think, well, I'm a student, or I mean, but I'm not really an investor, so that's not much I can do here. It's all interesting, but I think that's wrong. You know, at some point, all of you, for example, will have pension savings. So one thing you can do is call your pension fund and ask them, so what are you doing kind of to support young, impactful companies? What are you doing to make the large established companies in your portfolio to become more climate friendly? And also, I guess all of you have a savings account where you have your kind of your cash you need to have a ton. You can also call your bank and say, look, what are you guys doing with my money when I'm not looking at it? Obviously, they're giving out loans. So you can ask them, yeah, what are you doing with these loans? How you kind of do you now? You have certain demand of companies that get loans to become better over time. Do you give them better conditions if they improve their environmental performances and so on? And I would also strongly encourage next time you go to your bank, if you then have a great job and earn some money and want to save it, I'm pretty sure that by that time, your financial advisor he will or she will offer you a sustainable product that looks great. But please really ask, how does investing in this product make the world a better place?